Hello, good day. I welcome you to this class again. My name is Razak Adio, and I will be taking you through IT standard and framework today. In our previous lecture, we discussed about overview of IT auditing, and thereafter, we also discussed about types of IT audit focus area. That is, the area you can audit within your current organizations, or you can audit within for your clients. And also, we move on to discuss about what functions does an IT audit perform within an organization. We discuss much about that for you to know what is expected of you as an IT auditor. And then we also discuss about required skills for you to be a successful IT auditor. And then we later discuss about the differences between information technology as well as information systems. But today, we are going to be discussing about IT standard and frameworks. And under this topic, we are going to be discussing about IT standard and frameworks, then the significant technology standard and frameworks that we have, and how that is going to help us in carry out our review on information technology environments where we are or for our clients. And how important is IT to your organization? So we also discuss about IT governance framework that is currently available and how does it work. Then also we are going to be talking about the COSO components and also the 17 principles of COSO under the different 5 categories that we have. Then after we move on to discussing about IT governance structures that might be seen, as in that might be exposed to by the time you are carrying out an audit, either for your clients or within an organization you are currently in. So, a quick recap. I will be speaking from both perspective of an internal auditor, and at the same time, I will be speaking from the perspective of an external auditor, because I have both experience, and I believe some people might be watching this video being an external auditor, and some might be an internal auditor. So, I will be actually using both terminologies and speaking in both perspectives for everyone to be, to be able to, to benefit from this lecture. So let's move on. Thank you. Here we are going to be looking at the difference between standard and frameworks. So standard and framework are resources to leverage on by you as an IT auditor, both to gain an understanding of technology risk and practices, and to stand ready to have a high-level conversation with your audit client. So in this case, when we are talking about standard and framework, there is a difference between them. And what makes up the difference is what we are going to be discussing under this topic. Standards and frameworks helps organizations to comprehensively address technology risk. As we know that every organization is exposed to one risk and the other, but it now depends on the risk appetite of the organization that will go a long way to determine if a certain levels of risk will be accepted by the organizations, and what extent will the organization go to mitigate some of the risk that has been identified, that is, the organization is being exposed to. And also, frameworks and standards also helps an organizations to establish a better communication internally. So this fosters a common language that everybody understands around a particular area and allow for more accurate, more accurate comparison against others who have adopted the same standard and framework, where you belong. So what is framework? A framework helps define an approach. It helps to define an approach to, as per implementing, maintaining, monitoring, and also improving information technology programs within your organizations. That is, it just helps with what? An approach that you can adopt for you to implement a certain technological requirement or resources, how to maintain it as well within your organizations, monitor those implementation, and also use those implementation and resources to improve your information technology. So in this case, we have IT, that is Information Technology Infrastructure Library, and also we also have COBIT. So these two, COBIT is from ISACA, in which we are going to discuss more about in the next pages. So these two are the frameworks. So they serve as a kind of a guidelines and approach that you can adopt in implementing a certain information technology within your environment. So let's look at a standard. So a standard is an established norms. So most times a standard requirements are kind of a compulsory that's you have to adopt if you are actually using those standards like ISO 27001 or NIST. So when you are reviewing your environment, benchmarking it against this standard, it means that you have to follow it to the latter. And in ISO, there are some controls that is very compulsory for you to, that is very compulsory that you must adopt. While others controls areas are just like a nice to have controls within your organizations. So a standard is an established norms or requirements. You can say is a requirement on its own. Is a requirement regarding technical systems. That is technical system, your information technology areas. So standards are usually a formal document, can you see, that establish uniform engineering or technical criteria that must be, technical criteria, methods or processes and practice that must be adopted. And that's why we have ISO and also we have NIST in this category. So I believe with this little explanation, you'll be able to know that, okay, a framework is just like an approach, like a guidelines for implementing, maintaining, monitoring, and improving your organization's information technology. And here we have IT, and we also have a COBIT that can be adopted. And standard is an established norms, is a requirement regarding the technical systems. So it's also a formal document that establish a uniform engineering or technical criteria, method, processes, and practices that your organization can adopt. So if you are ISO certified as an organization, the controls stated in ISO must be actually followed by organizations and meet with the criteria that has been stated in the statement before you can be certified by the external body, where we have BSI, that is British Standard International Institution. Sorry about that. So here are one of the certified body that can actually review your organization, benchmark it against ISO standard, and they also certify you, provided you meet all the requirements and criteria that have been stated in the document. So let's move on. Here are the significant technology standards and framework that are currently available. So these are the main ones, though we still have other ones that are also available. However, these are the ones we are going to be discussing under this course, in which I believe that by the time you are trying to carry out your review, when you are trying to benchmark the process you are reviewing or the infrastructure you are reviewing against a known standard and framework, then you can use any of these stated standard and framework here. So here we have the latest COBIT, which is COBIT 2019 framework. So here, what is COBIT? COBIT simply means Control Objectives for Information and Related Technology. That is the full meaning of COBIT. So the latest one is 2019 framework. And what does COBIT speaks to? And under the COBIT, because COBIT also we have an ITAF. ITAF means Information Technology Assurance Framework. So this is also from ISACA. Both of them are from ISACA. They are frameworks that can be adopted in carry out reviews as regards to information technology. So COBIT is a leading framework, published by ISACA. ISACA is formerly known as Information Systems Audit and Control Association. However, I think in the recent past, so they have adopted ISACA. So instead of having Information System Audit and Control Association, So they are known as ISACA now. So some people pronounce it as ISACA. So just take note of that, please. So for the governance, you can see governance and management of enterprise IT. That is, you are talking about your organizational information technology. So the scope of the guidance provided in ITAF has been incorporated into the latest thinking offered in what? In COBIT 2019. So ITAF is an extract of COBIT 2019. But meanwhile, if you are reviewing COBIT 2019, the requirement or guidance of ITAF is also included in it. So, okay, let's move on to COSO 2013 framework. Under COSO, what is COSO? COSO simply means Committee of Sponsoring Organizations of the Tradeway Commission. That is the full meaning. So, this COSO's principles 11 of 17 of the framework addresses IT. That is 11 principles out of this, a whole 17 of the framework addresses what? Information technology. So the organization select and develop general controls activities over technology to support the achievement of its objectives. That is, how to achieve your objectives using information technology can be adopted using the COSO frameworks. And then under these frameworks that we also have NIST, that is NIST Cybersecurity Framework. That is, NIST is an institution which is National Institute of Standard and Technology. That is the full meaning of NIST. So most times we call it NIST, and some people call it NIST. So under here we have guidance for critical infrastructures organizations to better manage and reduce cybersecurity risk. So in some instances, ISO 27001 and NIST can be combined to improve, because in NIST there are some controls that was spelled out, but in ISO 27001 we don't have it, being, covered enough. So when you combine both of them, it means that you are further strengthening your organizational infrastructure. And so that is why some people are of opinion that both NIST as well as ISO 27001 can be combined to improve your organizational security. So under this framework, it has 5 domains. The domain are identify, protect, detect, respond, and recover. And each of these domains have their own requirements, which is being well spelled out. So maybe by the time in this journey, maybe at a point I can come up with some of these requirements, and now you can go about auditing these processes as well. So also we have IT, like I've mentioned earlier, is Information Technology Infrastructure Library. So IT is a widely and globally accepted set of practices for IT services management. So mostly IT is used for IT services management if you want to improve on your services management, and the same thing is also applicable to COBIT, because COBIT and IT, you can use it to improve on your information technology services management that focuses on aligning IT services with the needs of your business, of the organizational business processes. Because IT cannot work in isolation. IT is there to support the organization to improve on delivering their business objectives to their customers and to the public. So we also have a PM book, which is a project management book of knowledge, a body of knowledge. So here is about project management. As an IT auditor also, you have to be very versatile with project management process, because when you are trying to deliver on your projects, there are some processes that you have to adopt in order to deliver a good and efficient project. So PMI, that is this PM book is being released by PMI, Project Management Institute. It's a global standard that provides the guidelines, rules, and characteristics for projects, program, and portfolio management. And don't forget that you as an IT auditor also, there are some other activities that you can audit, like PMO, so project management office, where all the projects within your organization is being managed and deployed. So when you are trying to review this, you have to have this basic knowledge of project management. What and what you need to obtain from this team before you can audit evidence, and then how to develop your audit testing procedures. So just having this knowledge, it will go a long way to add values to you as an IT auditor. And then here we are talking about ISO, which is International Organization for Standardization. So ISO develops and publishes international standards for information security management and also assessment and treatment of information security risk for all organizations, regardless of their size, the industry, or probably the nature of your business or your organization. So, and that's what we have been discussing since ISO 27001, so 2022 version. So mostly every organization is trying to transit from 2013 version into 2022 now. So as a result, this is one of the standards that we are going to be discussing about. And you, as an internal auditor in your organization, if your organization is certified with ISO 27001, it means that annually you will be carried out internal audits on this ISO. And that simply means that you need the knowledge on how to carry out this review. So maybe in the practical sections, we just try to look at the controls and how you can go about reviewing those criteria and requirements stated in this ISO standard. Then the next one, we move on to the CSA, which is Cloud Security Alliance. And this, it establishes a set of best practices and controls related to cloud computing. Earlier, we mentioned about cloud computing like Azure. Please note, Azure, I think, is currently known as Entra. They changed the name sometimes last year. And then you also have AWS, Amazon Web Services. We also have Google Cloud. So these are well-known cloud providers that we have, that most organizations actually adopt. And these cloud environments, don't forget, instead of having your physical data centers, so most organizations, they have adopted the services of all these organizations by deploying their infrastructure into the cloud and manage it by themselves. So they subcontract it. Sometimes based on the scalability, you don't need to pay for physical server at once. You pay per use. So, and also cloud security is also there. So some people might say that, okay, cloud is not secure, but it depends on how you configured your security on this platform. So, and also that depends on the model that you subscribe for. Are you talking about SaaS, software as a service, or PaaS, platform as a service, or IaaS, infrastructure as a service? So it depends on what you subscribe for, because when you have SaaS, here you don't have a full control to control the environments or the underlying infrastructure in terms of patching. So this will be done by the cloud service provider. So when you have, so by the time we get to under cloud security, we further discuss about this, so that it will show you to what extent you can go to start your review. Can you review the servers under SaaS? No, because the server is being managed and maintained by the cloud service providers. And what you can do, you only have access to your data. Because here you have access to access control, that is to create users on this platform. Then in some instances, your data, because you can take a backup, they will show you how the process and procedure depend on the platform or the application you are using is subcontracted to them. And even it can be your core financial application that you are using in your organization to prepare your financial statements. So you have to have that basic understanding before you can go ahead and say that, okay, you want to review the underlying infrastructure, the database, the servers of this application. Can you do that under SaaS? No. But what can you do? So most times, okay, I shouldn't dwell much on this, but most times that's why we request for SOC reports, SOC 1 Type 2 reports from these organizations to show that the controls. We also have SOC 2 Type 2 reports, which actually based on internal control. But SOC 1 Type 2 reports is also it's mainly based on the third-party review. That is, third-party review of this cloud environment infrastructures, and they are going to release a statement as regards to either the control is working effectively or not, and any control failure will be stated in the report. So by the time we look at it, we know what we are exposed to in terms of risk, where our data is residing. Does that mean that another person, a fourth party, is having access to our data unknowingly to us? So by the time we get there, we actually further discuss about that. And the last on the list, we have ISF, which is standard for good practice for information security. Here is a forum, is a security forum standard is a business focus, practical and comprehensive guide to identifying and managing information security risk in organizations and their supply chain. So let's move on. These are just the significant technology standards and frameworks that we have identified, and we believe that these are also key in reviewing the IT environment of our organization. Please, let's move on. So here we are looking at how important is IT to your organization, so your company that you are currently working with. So like I said earlier, even if you are a sole trader, you still make use of information technology in this new age, in this 21st century, in the sense that you need this information technology to prepare your accounts, or to manage your inventory, and also to maybe communicate your invoice to your customer over the internet as a sole trader, just like what we have already identified here. However, as an enterprise, how does IT contribute or being important to you? Here you can see, provide a service for business. What are the services it's an IT provided to your organization? We have internal services such like your payroll, because for payments of salary to your staff, and also logistic movement of goods from one place to the other. This will be managed through an application. And then the accounting, where your financial statements is being prepared. Gone are the old days whereby you prepare your financial statements using Excel, or probably even using other crude manual process. But today we use an accounting software such like SAP that I've mentioned earlier, SAP for preparing the financial statements. So, and also see, it also provides a services to the clients of your business. So like external services now in terms of sales and banking. So here we are talking about internet banking, mostly in our banking industry, and I also have a mobile banking app. So these are many more services that IT enables within your environment that helps your organizations to move on. So how does this actually cascade to the goals, the mission and vision statement that organizations have already defined? So let's look at this. In your organization today, you will notice that the management will be deciding or probably coming up with a better processes to improve on your business, and also to optimize profits, optimize costs, and maximize your profits rather. So by the time they do this, they will identify some hiccups along the line and find a way to actually streamline that processes so as to be a benefit to your users and customers. Now, if your management or board of directors identify some processes that can be enabled by IT, Then they drive the investment in what? In IT resources. Maybe they want to buy new servers, they want to deploy new applications within your environment, and also to improve on your security. They have to, talking about SIM. You get? So all these tools, they are IT resources. And these IT resources that are used by IT processes, that is the process of posting to those applications, the process of using those applications by the people within the organization, and using this application, these resources to these processes to deliver the enterprise information to the organization, so to improve on the business itself, and thereby which responds to the what? To the business requirements. And that's why you are saying that IT governance, it goes a long way to ensure that the IT environment, your IT organizations or IT departments, also follow through the mission and vision statement of the organization by aligning their own processes to the business requirements. So it doesn't make any sense whereby your organization is going right and your IT is going left, which simply means that there is disconnection between both, and as a result, any investment in your IT organizations will be a waste to the organization because it contributes nothing to the mission and vision statements of the organization. And that is why alignment of your IT environment to your business requirements is very important to take note of. And sometimes as an IT auditor, by the time you are carrying out your review, you also look at those particular areas that, okay, what is IT doing? Does it actually cascaded, as in cascading it down into the business requirements that formulate the objectives and goals of your organization? So this is just kind of extract, that is how importance of IT to enterprise success. So the use of IT can potentially be primary driver for economic wealth in the 21st century. In some industries, just like I said, IT is a necessary competitive resources to differentiate and provide a competitive advantage, while in many others, it determines survivors, not just prosperity. That is, for your organization to compete with other organizations in the same industry, maybe your competitor, you have to improve on your IT resources and environments. So let's move on. Here, that is where we are going to be discussing about IT governance. Please note that when we are talking about IT governance is a subset or an element of corporate governance. Note that corporate governance is a process of controlling and directing an organization in order to achieve its goals and objectives. So when we are now saying that IT governance, what does it mean? That simply means that is a process of controlling and directing the uses of IT within your organizations to align with the business requirements in order to achieve the organizational goals and objectives. So, earlier we discussed about IT alignment with the business requirements. If you fail to align the organizational IT environment with the business mission and vision statements, it means that any investment in IT is a waste to the organization because it contributes no value. And how can you know? And what domain or the main IT governance domain that are applicable for you to justify that, okay, your IT organizations is aligning with the organization's mission and vision statements? Here, there should be a value delivery. So the process, we have already identified that it takes maybe, let's say, an hour to deliver services to our customer. For instance, maybe our process before is that a customer has to come to our branch, maybe they want to update their profile. Fill a profile form. The customer will have to, submit it to customer service. Submit that same form to customer service. Customer services will take maybe like 20 minutes to process it on the system. And looking at this is a waste of time for your customer, right? But due to the fact that you want to improve on the service, on the value delivery to your organization by deploying IT within your environment, your IT suggested an application that can be used for customer service for updating their processes. Maybe they deploy an application for taking all this. So in that application, these processes are there. The customer just fill it, insert their signature, or probably any authentication or authorization method that has been embedded there, and within 10 minutes the customer have submitted this, and the customer service staff pick it up from here and implement. So as a result, your IT organizations have delivered value to your customer by improving the processes. Then we also talk about strategic alignment. That is, there should be an alignment between your IT direction and with the business requirements. Then performance management. In every organization, don't forget, you have to measure performance. That is, what will justify that, okay, you are performing as expected. Take for instance, in an SLA that has been signed with an ISP, we talk about our ISP, Internet Service Provider, that promised to deliver maybe, let's say, 99% uptime. That is uptime without any downtime. That is, the level of downtime will now be 1%, maybe in a year, which is fine, right? However, measuring the performance when the payment is supposed to be made to this ISP, we discovered that what was delivered was maybe 80% as against the 99%. So because you have a system that measures what these people are delivering, maybe day on day, day by day, for you to be able to assess that, okay, it's only 80% that was delivered. So with that, we know that, okay, from the SLA that was signed by these people, they might have stated a clause that if you fail to deliver 99%, so our fee can be reduced by 20%. So that you'll be able to monitor. That is part of monitoring processes. Then we move on to resource management. I've been to different environments whereby the IT teams does not even maintain the list of applications they are maintaining, as in they are managing. They don't have a kind of oversight over the total application within the environment. And we believe that managing all these assets is the function of IT for them to do. It belongs to them, and they should be able to know how many applications are we managing, and who are the business owners of this application. So that cascaded down to having a kind of an asset register, and at point in times know the versions, the database they sit on, what is the name of the database. So this goes a long way for the IT teams to perform as expected and align their services and improve services delivery to the organization. Moving on, we also discussed about risk management. So that information security is very critical, right? And that's why as an IT, you should be able to know that, okay, when you are trying to deploy a new technology, you have to understand the security configuration, the hardening process that you can deploy or implement to further strengthen the security of those infrastructure within the organizations. Failure to do so, a bad actors outside there might have access, unauthorized access to those infrastructure, and doing so might compromise the confidentiality, integrity, as well as availability of those information assets. And that's why it's very critical for the IT teams to follow this, to deliver on this mandate, for them to add values to the organization. So governance framework, what does it do? It allows management to assess and manage risk in their organizations. So this framework actually establishes procedures for them to assess and manage risk, because every business is exposed to one or two risks, and you as a business owner, management, you should be able to know what risk your organization is exposed to, and from there you can be able to assess the risk and come up with a mitigating controls that can be deployed to reduce the risk to the barest minimum that the management can accept. So moving on, we are talking about internal control framework. Is a framework for an entity's internal controls environment, that is a control that you can deploy just like a mitigant or mitigating controls to reduce risk within an organization. This is a COSO framework. So internal control is designed, as you know, implemented, maintained to address identified business risk that is threatening the achievement of the organization's objectives and goals that concern. What does it concern? It concerns about reliability of the entity's financial reporting, just like when we discuss about your core financial application such as SAP, which is used to prepare your financial. So what do you think will happen if a third party have an unauthorized access to this application? It means that the figure there can be manipulated. If the figure there is being manipulated without your consent, it means that you believe that what is there is correct and accurate, except until when an external auditor is reviewing your environment to dictate that, okay, no, this is abnormal, this shouldn't be this way, for them to dictate and correct. And don't forget, even like a core banking application, if this happens, it means that this third party, the bad actor, can transfer money from that your core banking application into different bank accounts. So because they have access to do and undo. So that is why it's very critical that, okay, reliability of the information on those applications is being protected. And then control. What can you do? You deploy control to strengthen the security by having your access control and the likes. So also concerned about effectiveness and efficiency of its operations, because in some instances we understand that some processes or operations might be exposed to some risk that needs to be mitigated, and also in compliance with what laws and regulation. Every organizations today have one public policy or law that is applicable to them for them to abide. So here we are talking about what we just discussed now is what? This operation, financial reporting, and compliance. So what it means is that when you fail to abide by the public policy and law, the organization is exposed to penalties and punishments, and as a result, it can result into reputational damages to the organization. And the reputational damages will lead to what? Reduce in your revenue. And if revenue is reduced, your bottom line is also reduced. And that is why deploying this necessary control is very critical. So by the time we move on, we will discuss about what controls can be deployed and how those controls can be implemented within different environments. So regardless of the size, regardless of the size and complexity of that organizations. But also take note of this, please. Internal controls is designed, implemented, maintains, because it varies based on the size and the complexity of an organization. We have some environments, IT environments, whereby you only have one person in the whole of IT. So how do you want to deploy SOD in such an organization that is segregation of duty as a control measure. So we look for alternative, just like audit log, for every action performed by this same person. Then who is reviewing that audit log? We have to ensure that that audit log is being reviewed for appropriateness in a timely manner, to ensure that any unnecessary process or changes that is being deployed by this person can be mitigated. So we further discussed about that, and also the division of internal controls into the 5 components. Just like I said, COSO has a 5 components, which is this: monitoring, information and communication, control activities, risk assessments, and control environment. So we further discuss about this as regards to the international standard on auditing, that is ISA 315-852. So let's move on. So these are the 5 components of COSO that we have to be familiar with, and what these components actually speaks to, and how do they relevant to you as an IT auditor. Like I said yesterday, that one of the skills that an IT auditor must possess is a risk assessment. You should be able to know how to identify risk and the mitigating controls that can be deployed to reduce the impact of those risks in an organization you are working for or your clients. So COSO framework is the best framework that actually details internal controls functions that can be deployed within any organization. So let's take note of this. Let's take them one by one, so that you understand what corporate governance actually speaks to, before we can now be discussing about IT governance. Like I said earlier, that IT governance is a subset of a corporate governance. The corporate is talking about the enterprise as a whole, but IT governance is only speaking to the IT environment within the same organization. So here we have our control environments. What does it mean? So the first objective in principles here is that the organization demonstrates a commitment to integrity and ethical value. That is, the way they do their business is ethically sound and justifiable, and also they have integrity in their own processes. And before that can happen, we have the board of directors demonstrate independence. Can you see? That is, the board of directors should not be the same person managing the same organization. So the board of directors should be separate from the management. Now we have 2 arms. Take note that you, as an IT auditor, you belong to internal audit. And an internal audit is an oversight functions of the board of directors, because your own main reporting line as an internal auditor is to report directly to the board of directors about the effectiveness of controls that management have deployed within the organization, right? So that is why we say that there should be an independence of this board of directors as well as management, and exercise oversight of the development and performance of internal control, because the purpose of the board of directors is to ensure that the control they have put in place through policy definition are working effectively and as directed. Don't forget that management can override control, right? Because they are the one managing the day-to-day operational processes of the organization, and at a point they can override on control. And that is why internal audits, you as an IT auditor, you carry out review, a risk-based auditing within the organization on yearly basis. You understand? So by the time you are carrying out your review, you identify all this override, and you is to report directly to the board of directors what you have seen, and the board of directors will take action, because board of directors are those people that represent the shareholders of those organizations. While the board of directors appoint the management to steer the day-to-day activities of the organization on their behalf. Also, let's move on. Management established with board oversight structures, that is, the structure, the reporting line, and appropriate authorities and responsibility in the pursuit of their objectives. What this simply actually refers to is that there should be a structure. In every organization, there will be a different department that is responsible for different functions, right? And in that same department, you have your reporting line. So mostly as a junior staff, you report directly to your manager or your supervisors, and your supervisors later report to the overall head of the management, which is your MD or the CEO. They report to them. Although internal audit also reports, like a indirect reporting to the management, that is the MD, CEO, but their direct reporting line is to the board of directors. Please take note of that. For those who are not, accounting students, maybe they are technology, just take note of that, please. And then again, we talk about the organization demonstrates a commitment to attract, develop, and retain competent individuals in alignment with objectives. So this is just talking about human resources parts, whereby retain competent individuals that can do the job and help the organizations to achieve their set targets. Set target might be that, okay, you want to maximize our revenue. So how do you maximize revenue? You need a good arms that can deliver on different processes and operations within the organization, right? So let's move on. So that the organization hold individuals accountable for their internal controls responsibility. So, okay, let me just break this down. We have finance department, right? The finance department is overall department that actually sees to your spending, that is the expenditures, either OPEX or CAPEX, and the income. Okay, let me call it income, not revenue. Income recording and reporting into the financial application that produces the financial statements. Now, here in finance, we have different people, right? Maybe cash management, payable, accounts receivable, and then maybe we also have, okay, we have cash management here already. Let's just use these three as example. You, as a payable, okay, cash management, you are the one handling cashes in terms of payment to vendors, how cash flows within the organizations, and the likes, makes cash available for the other function. And then also we have payable, paying your creditors and the likes. And then we also have receivable, the debtors. You are the one receiving from them and then recording it in the financial. What do you think would be the issue if this one person in receivable, okay, let's say in payable, have access to the modules for receivable and have access to modules under cash management that can even post into these three modules? So this is the challenge, and that is where we have segregation of duty, SOD, whereby you're only responsible for what function you are performing within the organizations. So you only have access to what you can do, and even this SOD sometimes actually means that whatever this person posts flows to the supervisors to approve before it imparts on appropriate ledgers in the financial. So you can't just post and it flows directly and imparts on the appropriate ledgers without flowing to your supervisors or manager for them to take a second look and approve before it imparts. So at this stage of supervising, it can be rejected. That, okay, no, what you have posted is wrong. It shouldn't be to these GL lines. You get that? Okay, it's supposed to be in under GLs, So at this point, the risk that, okay, you mispost into the application can be prevented, right? So in a case where this supervising role is not there, and then this person can be able to post either a transaction that exists or doesn't exist within the organization. So it goes a long way, right? And that's why we are talking about controls deployment in each of these processes. So by the time we move on, we discuss further. So under the 6, we say that, okay, we also have organization specified objective with sufficient clarity to enable the identification and assessment of risk relating to objectives. Here now, we are talking about risk assessment that is related to, that can impact or prevent the organization from achieving their objectives, right? And that is why we have, most organizations, a standard organization, we have internal control departments that is responsible for managing and identifying risk. You get? Then we also say that organizations identify risk to the achievement of its objective across entity and analyze risk as basis of determining how risk should be managed. And later we are going to be discussing about different controls that we have, and what actually responsible for risk and how the risk can be mitigated. Then the organizations consider the potential for fraud, that is how fraud can occur, just like what I've explained as regards to SOD here. For payable accountants, posting directly and imparting appropriate GLs, either there's no monitoring or supervising rules being embedded here. As a result, it means that even any transaction, if payable that does not exist, can even be posted by this same person and take the payment from the cash management. That gives room for fraud, right? In assessing risk to the achievement of the objectives. Also, the organization identifies and assesses changes that could significantly impact the systems of internal control. Changes in the sense that, for instance, we are going to discuss about that under access control. If a staff has been maybe in finance departments, for instance, a staff A was initially in finance, but later, maybe after some months or years within the organization, this person was redeployed maybe to operation. However, this person still have access to post or make payments into the finance application, and also have access in the operation. What do you think will happen here? So anytime a changes occur within the organization, there should be a modification, there should be an improvement on that to align it with current reality. So leaving it means that we give room for fraud to occur in the organization. And then we move on to the 10th one, which talk about select and develop controls, activities that contribute to the mitigation. I think we have discussed about this. We develop a controls that can use to mitigate the identified risk, right? Then the organization select and develop general controls. So we are still going to talk about this, that is under GITC for IT part. So we see how over technology to support the achievement of objectives. Then the organization deploy controls activities through policies, and I think we have already discussed that. That is the overrushing, which simply means that the board of directors and management, we develop a policy for different functions. That is like a passport policy now. It will have a different parameter that has been stated. Password should be changing for everybody every 30 days, right? Then the minimum password should be 8 characters, Then, so when you are logging into a critical application, you have to use multi-factor authentication, MFA or 2FA. You get. So these are it. And also, we say that the organization deploys activities through policies to establish what is expected and procedure. So here, I think we discussed about SOP, which is the procedures that put the policies into action. Under the information and communication, we have organization obtains or generates uses relevance, quality information to support the functioning of the internal control. Because through your information, analyzing the information can help to provide the support in deploying an effective internal control. Also, organization internally communicates information, include objectives and responsibility to internal control necessary to support the functioning of internal control. It depends on what your organization is going to adopt. So you are likely to have an internal control function that will be, disseminating information, day by day, sometimes for you to know what is expected of you. It might be a new staff in that organization, or it might be an old staff, but regardless of your status, there will be a communication to let you know, just to awaken your understanding as regards to what is expected of you. The organization communicates with external parties regarding matters affecting the functioning of internal control. So I think yesterday we talked about TPRM, third-party risk management, on how this can be done. So for any third party that is having access to your data, how do you go about that? And how do you communicate your third-party risk policy to your third party for them to also abide with that? And then don't forget that we have our GDPR, and also in Nigeria today we have NDPR as well. NDPR policy that speaks to the privacy of your customers or of your customers' data. Then under the monitoring activities, so here we are just talking about like what we discussed about performance, how to monitor the activities of what has been put in place. Just like we have already deployed all these controls, how will you be able to monitor that, okay, these controls are actually working effectively as expected, as designed by the management and the board of directors? So that is where we are looking at monitoring activities. So the organization select, develop, and perform ongoing or separate evaluation to ascertain whether the components of internal controls are present and also functioning effectively. Don't forget that as an auditor, you also carry out a follow-up audit. A follow-up audit on the open exceptions. You get, so you have an exception that you have already picked maybe in your previous audits, and then you notice that this has not been implemented, maybe due to resources constraints or some other things that may contribute to that. So when you carry out a follow-up, because in that audit, the audit client might have given you a timeline for remediating this. It might not be immediately when you carry out the audit. So maybe for instance, you have given second quarter 2024. So in your second quarter, you can now carry out a kind of follow-up with the audit client that, okay, yes, based on this exception we have picked in so and so period, can you please confirm the status of what you have done? Either the exception has been closed or is still currently open. And that will also formulate another report to the board that based on what you have identified in the previous audits, you notice that, okay, this audit gap or exceptions is here to be closed. It means that the risk that has been identified, either high, medium, or low, is still applicable to the organization, and this can be exploited, just to further justify that. So I'm just referencing that, okay, that you as an internal auditor, IT auditor also, you carry out a continuous monitoring, which is follow-up, to verify and validate that previous audit exceptions has been closed or still open, and to report your observations to the management. Also, the organization evaluates, communicates internal control deficiencies in a timely manner to those parties responsible for taking corrective action, including senior management and the board of directors, just like what I've explained. After you notice that, okay, this thing is still open, and based on the risk that I've identified, you report back to the management and also to the board of directors on your quarterly reporting. So these are the 17 principles that COSO have highlighted based on these 5 components: control environments, risk assessments, control activities, information and communication, and monitoring activities. So based on these 5 components that we have already identified of COSO, here the control can be direct or indirect, right? And under direct is that a control that directly addresses risk of material misstatements. Please note, when we are talking about material misstatements, what we refer to is that any information that can alter the status of anything. For instance, if a sales value in your financial accounts that is being reported is 17 trillion, but in true sense, the sales value ought to have been 10 trillion. The difference here, it actually changed the reporting line, or let me say the value that you are going to be reporting in your financial, right? Which sometimes, in your bottom line, your profit will also be influenced by this. So anything that influences the decision that can be made as regards to whatever has been presented is referred to as material misstatements. In some, we call it ROM. Maybe in Big Four, I'm talking about Big Four, so they call it ROM, that is risk of material misstatements. So at the assertion level, so indirect one, it's not directly address the risk of material misstatements, right? But contribute to or affect the effectiveness of the direct control. So in this case now, what do we mean by at the accounts or assertion level? Let's talk about assertion level for a while. So like I said, my listener, you might not be an auditor previously. Maybe you're a computer science student that want to venture or go into IT auditing because you have prior experience in IT or information technology, and it will go a long way to actually assist you in your journey. However, in auditing we have terminologies that we actually used just to identify that anything we are testing, we test it based on assertion level. So I will just take it at a as it is. Then I will now pick those that can relate to you as an IT auditor when you are reviewing some figures relating to financial information. So what do I mean by that? Under the assertion level, we have a lot of assertion level, but I will just take some critical one that that might also applicable to us as an IT auditor. In my years of experience, I think I've come across that as an IT auditor as well, that this is very important for us to also note, not only for the financial auditor. The first one is called occurrence. Occurrence simply means that the transaction recorded or disclosed actually happened and relate to the entity. It relates to the organization you are auditing. Sales. Does that sales actually happened, or you just recorded a fictitious sales? And the sales figure, is it being overstated or understated? So occurrence means that it actually occurred, and its occurrence is applicable to the organization you are reviewing. Please take note of that. And the second one that I want us to note is this accuracy. Impliedly, what it means is that there has been no errors while preparing documents or in posting transaction to the ledgers. You get? So maybe individual accounts in your financial applications, that's ledgers. So there's no any error. And which simply means that okay, for instance, when we make a sales of 10 million, you report the 10 trillion, not anything above or below. That is accuracy. Then we also talk about cutoff. Let me mention this. This cutoff simply means that transactions are recorded in the correct accounting period. What do I mean? So you might be thinking, why does this relevant to you as an IT auditor? You are not a financial auditor. Yes, it's relevant to you. Maybe let's assume that we are working in a financial institution, a bank, for instance. In your banking, don't forget that there will be a loan granting to different clients, and can also be an overdraft, right? So in loan granting, there will be an interest charge on it, right? So let's assume 20%. And also overdraft, there will be a charge on it, right? But let's take loan for clarity purpose. We are talking about cutoff. You granted a loan from July 2023, and the loan will span to, let's say, April 2024. You as an IT auditor, when you are testing for interest record, don't forget, in financial reporting, you have to, and then the organization prepare their financial as at December 31st every year, right? It means that for this transaction started from July 2023. So it means that December 21st, 2020 and 31st, 2023, there should be a financial statement that needs to be prepared by this organization, right? Am I correct? Now, if that happens, it means that you cannot take the whole interest. The whole interest. Take note, you cannot report the whole interest from July to April 2024 in year 2023. No. And that is why cutoff is very key. Is very important for you to also note that is important, as in it is a kind of criteria you have to note. It means that you can only take the interest from where? July to 31st December 2023. Sorry. You can only take the interest due for this period and report it in this year. Not that you report from year to year. No. So the remaining part, which is from January 2024, will be accrued revenue. You get accrued income to the organization in year 2024. I hope you understand what I was trying to say here. It means that cutoff is also applicable to you by the time you are testing the accuracy of the system computation of interest. You have to know that, okay, the system compute and recorded this interest for a period that is applicable under your review. I hope that is clear. So then the next one we want to talk about that might also be applicable to us is accuracy. Okay, we have looked at accuracy. We look at completeness. So completeness, that is information the organization is providing to you, is it complete? Okay, let me talk. I think I did not explain what assertion level means. Assertion level simply refers to the claim business owner and the managers make that state that all information they have shared during the audit with you is accurate. But you as an auditor, we have a slang that's trust but verify, right? We trust them, we believe what they have said. But what we are just trying to do here is to verify that what they have told us is actually the stand, the reality, nothing else. And that is the essence of carrying out this assertion level. So we discussed about completeness, right? So in completeness, we are looking at that there is no omission. There's no omission in the information or the data they provided to us. But as regards to financial accountants, they will say that there's no omission in the asset and liability that should be recorded and disclosed, right? But in our own case, we are looking at the information they have generated. For instance, we want to test the interest on loans. We have to get the loans portfolio, right? The loan they disburse within the period under review. By the time we get the loans, in it, we request for the repayment schedule that has been prepared for these clients. this repayment schedule needs to be generated from the system as well, because the system will have done the computation using the 20% interest rate, right? Just the example we mentioned earlier. And we are trying to do a recomputation to recompute what the system have calculated that is also accurate by doing it manually. And if peradventure, maybe let's assume that the organization disbursed 200 loans within the period, and completeness now, we want to ensure that what they provide to us is also 200 without any duplicates. You understand? So that is what we are testing here. Then we move on to testing, okay, these other aspects. Yeah, okay. Existence. So what they are telling us, for instance, in the loan, are we showing that this loan was actually disbursed? Does it exist in the organization, in the system? So means that asset and liability really do exist, and there has been known overstatements. In the case whereby they provide us with 210, it means that they have overstated what they disbursed to us, and that's why we are looking at existence. So mostly we can only look at it at that transaction level when we are obtaining this audit evidence. But mostly we use this completeness, cutoff, accuracy, and also classification is not so, though we can discover it as well, and then we can report that. Classification simply means that the classes of assets or expenses that is being incurred. For instance, if you purchase an asset, maybe you purchase land, you don't expense this. You don't expense it. That is, maybe you purchase it for 50 million naira in year 2023. You don't record it other expenses as 50 million naira in the same year. Because it's an asset, you have to capitalize it. Capitalize it simply means that you depreciate this. Land is not depreciable, you get, but you capitalize it in the financial position, that is your balance sheet, to show that okay, you have this 50 million under the assets, you get. So you don't expense it in the same year. So mostly if it is machinery, for instance, so you have to depreciate it. First you have to determine for how long are you going to use this machinery. If it is for 20 years, so these 20 years they will use it to calculate the depreciation on this. It depends on the method they are going to use, either the straight line method or reducing balancing method. So it depends on the method to use to depreciate this over the 20 years lifespan. So it means that year on year depreciation will be calculated and expense in the income statement. Why this value, the depreciation will be reducing the 50 million in the financial position on year. So I think with this little explanation, you'll be able to understand what transaction level means and what transaction level we can use in carry out our IT audit activities as well. So let's move on to discussing about IT governance structure. So when we are talking about IT governance structure, we are just talking about the design of your IT operation. That is, in your IT departments, how it's being segregated based on functions. Like I said earlier, that in some organizations you might have just one person as an IT managing all your IT assets. So how do you want to ensure that this person is not, overdoing his own function within the organization? We are talking about SOD. Can SOD be implemented where you have one person? So that one person will be the one configuring your server, will be the one deploying your database, will be the one managing your application, managing all access control on this IT infrastructure. But how do we ensure that there's no any abuse of performing its own functions within the organization? So in organizational structure now, we are looking at a way whereby one person does not perform all the functions within the organization. Here, who is in charge of your IT? don't forget, we have your board of directors. So it depends on the assumed importance of IT. There may be an IT director on the board, or there may be and they might report to one of the board. So it depends. You get? So whatever activities these people perform, they still need to report back to the board. You understand? So, and then what are the oversight might be that over IT? So we have strategic committee and steering committees. So these are the two committees that manages your IT activities within the organization. So it means that from the board level, they can dictate and ensure that your IT functions align with your business objective, because these are the representative of the shareholders, and they are not involved in the day-to-day activities of running of the business. So the running of the business is done by the management, who are saddled with the responsibility of managing the organizations in alignment with the defined goals. Right? So board of directors, they are just providing a kind of oversight to ensure that there's no any digression from what they have already highlighted to achieve and what your IT organization is currently doing. So let's look at the small organization. Here we have finance directors, IT manager. So IT manager reports directly to the finance director. You get? And IT manager also maybe reporting to the finance director group. It depends. And under this IT manager, we have IT staff. Maybe this one is responsible for server management, and this is our DBA. You get? So it means that they are performing different functions, right? So you can see these are the structure we are actually referring to. Let's look at medium, whereby we have more of other functions. We have board of directors, right, that have an oversight function. We have COO, Chief Operating Officer, and then here we have IT directors that oversees IT activities and report to the Chief Operating Officer before we have the board of directors. So here, the IT directors have business analysts, they have director of development that report to him, and also have infrastructure manager. So under infrastructure manager, and also don't forget, you can also have an outsourced services, maybe to third party, right? And that's how we talk about CPRM, third party risk management. You can also have an outsource. This can also be a cloud provider, cloud service providers like AWS that provide another services to us, or probably our ISP, you get, providing the internet service provider. And under this IT infrastructure manager, we have IT support analyst. IT support analyst, it might be two more than that. So second line, IT support, so, and here under the director of development, we have application developer. So we have web developer, SQL developer, and then database administrator. So in this case now, you can see that these functions has been segregated, has been divided between different functions or different people within the organization. And don't forget, you can see that this is the structure we are looking at, right? And don't be fooled as an IT auditor. By the time you receive the IT organogram, which is this structure we are talking about, when you receive the organogram and you see something like this, that okay, this is A performing this function, B is performing this function, C is performing this, D, E is performing this, F is performing this. But in reality, is that how this was designed on the system? And that is why, we go back to our maxims: trust but verify. When you obtain the list of all users in each of these applications, database, SQL, and then database administrator, you'll be able to note that, okay, is it truly that F is performing this function? Is it true that E is performing this function? Does it have another function is performing here that he or she is supposed not to be performing? And you can only get to know that through review of the access control given to you and the permission granted to these people on the application, right? So please just take note of this. This might be what's applicable in your organization, it might be this, and it might be this complex one for a very robust organization. You can see here that we have Chief Information Officer, which is CIO, right? Under this CIO, we have different functions, can you see, that has been identified for them. And that simply means that these services has been defined in a structural way. And the same thing, don't forget, don't be fooled with this. You still need to, we have project operation, right? Project implementation, project operations. We have application and operations. So we have all these people being separated. But don't be fooled. Obtain the access controls and permission granted to these people and ensure that what was granted to them is on need-to-know basis, that they don't have more than what they're supposed to have within the organization. And this will go a long way to help you to identify that, okay, an unauthorized access was granted to so and so in the system. And with your audit evidence, you are good to go with your exceptions. So this is where we are going to be stopping today. So let's just recap on what we have discussed so far. We discussed the importance. It is important that we identify how IT departments might be structured within your organization. So once you understand how the structure is, that will go a long way to help you in your review. Ensuring that an IT department is appropriately structured and skills is an important component of assessing the overall IT control environment. We have been discussing about IT control environments. So you have to understand how their structures, the application you use, the database, that is the infrastructure, database and servers, and who have access to all this application. What access does our third party has on this application? This will help you to understand your IT control environment. And don't forget that you can also have a subcontracted services, just like outsourcing to third party or probably to cloud service providers and the like. So you have to also identify that to formulate part of your IT control environment. However, we should also note that there is no one best way to organize the structure. All right, it depends on your environment. And elements of an organizational design, such as a scale, scope, structure, are highly dependent on the strategic objectives of your organization. So don't say that, okay, because you review organization A while you are working with A, and when you get to organization B, you are expecting to have the same structure. No, it doesn't work that way. What it means is that you have to evaluate your organization's structure, which is organization B, to see that the structure they adopt actually speaks to their own structure, right? And that will go a long way to also assist you. Yeah, this is where we are going to be ending this today, and then I will be meeting you in our next lecture. So what do we want to talk about in our next lecture? Here we are going to be discussing about developing an IT audit plan. And this is where we are going to have a detailed understanding about, how do you go about risk assessment and a type of risk that is applicable to the organizations, and understanding what difference do you understand between vulnerability and threats. And also you have to understand the information technology audit, the risk assessment part, and also develop IT audit plan. And then later we look about the summary of what we have discussed under this. Thank you very much. Please subscribe to my channel, and I will be meeting you in our next lecture. Thank you. My name is Razak Adio. I'll meet you next. Bye.